How about now?
Yeah, you can see. I can see the screen now. I don't know about that, but I can see the screen now.
All right. So we talked about the last minutes of the session yesterday is where we talked about mitigation blocks and breaker blocks, and I marked them out yesterday. I was saying it is a rough sketch, and today we are going to go into details from breaker blocks and mitigation blocks. So, hold on. So, as uh, as I marked yesterday, uh, breaker blocks and mitigation blocks. So,
Is that door
breaker block.
tonight?
Please mute
Oh,
your mic, please.
that's
No, please stop.
see, if you two go do that massage oil, we go use them tomorrow. Yeah,
Nicky Jerry, please mute your mic.
I will do.
Um, oh my God. You, who is that? You dey use massage oil. Ah God, is anyways, let's continue. You see, don't forget to unmute your mic and then you come and mistakenly leak things that are supposed to be private about yourself, because we have no business knowing about using massage oil for whatsoever tomorrow with your maybe spouse or girlfriend. uh, Anyways, back to business. So, as I said yesterday, a breaker block is a failed order block. On a normal day, our order block will be somewhere around here. So it failed. That's it got invalidated by taking it out. So on taking it out, we expect that reversal or pull back all the way to that same block. Then take out the next corresponding low or continue the new trend. Okay, I said something yesterday about going the same way, and someone got it wrong and was like, if we are buying before and then like if it's a other block before, we'll be trying to buy, and by the time it's a breaker block, we'll be selling. So the person was like, it's not the same way, which is right. Me saying the same way means continuing whatever new trend. So a normal day, a breaker block will be for, let's say if it's a bearish breaker block, it will be a demand turned supply. Now let me not get you too confused. I would have said that yesterday, but I don't want to just get things scattered or confused. A demand turned supply simply means of course this was a bullish order block, right? And that's a demand. That's supposed to be a demand entry. So but on taking it out, it turns to a supply because now we are selling. This is what I'm trying to say. On a normal day, before this got taken out, this would have been a bullish entry from the other block, right? TP might be somewhere around here. But now that price has taken it out, so it's a demand on supply. This is the part where some people will be like, breaker block is just support and resistance, blah blah blah. As much as they can be right, this is a strategy on its own. So it works hand in hand with support and resistance also. But my point is a demand turn supply. So if it's bearish, if it's bullish, this is where it to look like a supply turn demand. So this was the momentum structure shift, change of character, break of structure, whatever this thing. In as much as it breaks structure, I'll still go into details on how the structure must actually break. So it has to break with a full body candle, as we all know, not a wick. So we have the MSS here, momentum structure shift. Then we have this. So this is supposed to be an order block, right? But got violated. So on getting violated, the supply now turns demand because we expect a pullback to continue this. So that's what I mean by demand turn supply or supply turn demand. So that's for breaker block. Why for mitigation block? As I said yesterday, we don't necessarily need it to break structure. So of course, if this doesn't break structure, we have no other block. But sometimes price will form this while is in a downtrend, or we have a movement, a quick movement to the downside or to the upside. But once we have it like this, the last low here, most time price pulls back all the way there. So after the pullback, we mitigate that and then continue. So the same rule of other blocks applies to this. Last bullish or bearish candle of anything you see around here will still be the area you are going to mark. Same way with this. For you to mark other block, it will be the last bearish or bullish, depending on the trade. So it's the same rule applies here. You mark it. So that's it for both breaker block and mitigation block. So
Please, I can't hear you. I don't know if I'm the only one. No, please.
that was, you guys couldn't hear me. That has been since when?
About 2 minutes now.
2 minutes.
No, just when you started this, when you are putting this replay stuff, I know. We had you until you remove
All right.
the notification block on this.
All right. Thank God. So I'm getting let me delete this just for clearer chat. So here we have this. So yeah, this was a mitigation block. You can see there was no break of structure here. Price didn't break. break structure. Price didn't break this low. Price didn't break this low this way. If it has broken this low, then we'll say that was a break of structure, and we'll have another block. Yeah, right. But no, nothing like that happened. It was just an eye without. Let me delete this also. So just an eye without none of that. So it got violated. So on getting violated to this upside, it is that pullback to this area that we're expecting. So for continuation entry, of course we've been bullish. Don't forget that for you to take trades like this, most times they are continuation entries. So it started from here. This IDM order block, this was 50% of order block getting mitigated. So that was 50% of order block getting mitigated. So of course we've been bullish. For whatever reason we've been buying here, just know that we've been bullish. Have that at the back of your mind. We've been bullish. So you don't just blindly see mitigation blocks or breaker blocks. It has to align with current trade. In fact, most of the rules that comes with fair value gaps almost applies to mitigation blocks also. It must correlate with current trend. Uh, wait for price to return to that particular zone. Don't chase the move, allow it to get there, blah blah blah. All those rules that comes with fair value gaps applies here also. So as I said earlier in the sketch, you can see this last bullish candle. That's the candle you are going to use. So of course also, I said it yesterday, you can either use the 50% or use the surface. But as you can see here, it's looking like uh it's not even like let me not even say it's looking like, it is actually mitigating, it is actually overlapping with a fair value gap, with a 30-minute fair value gap. Let me check one hour fair value gap. Can you guys still hear me? I think I'm having network issues, but I hope we get this clear. You guys can still hear me, right?
Yeah, we
So
can hear you.
all right, so this is the mitigation block here. So you mark the mitigation block and then you wait for the pullback. So here's another rule. If it doesn't pull back, like if we don't have this pullback like this, it is better to just wait for an inducement. But sometimes it comes this way. This didn't go out for long, even though it took this high before the reversal, before the pullback. It took this high, which we would have tried to use as a TP. But in as much as this higher time frame, I said it when I was talking about fair value gaps. If the higher time frame is not taken out and you're taking continuation entries, you can still go on to take the entry. So that was what happened here. We took out
Boss, can
the
I ask a
normal.
question?
Yeah, go on.
Yeah, please, I'm not actually seeing your mitigation block right now because of this drawing tool. Please, can you just exit from the drawing tool?
The drawing tool of the MB. Huh?
Your
Can you hear me? The
mitigation
drawing
block.
tool.
The mitigation block
Yeah,
hasn't
the
it
drawing
been
tool
like
that I used to.
no, I'm okay now. I'm okay now. Boss, can you hear me?
Are you sure? You're saying you are okay now?
Boss, yeah. No, like I want to ask the question now. Can you hear me now, boss?
I can hear you so far.
Okay. The mitigation block hasn't it be already mitigated? Looking at the break than the surface mitigation.
All right. Are you talking about? Yeah. Are you talking about? Yeah.
Yes.
That is not a mitigation. You see, when price takes this out, especially impulse, it's because I'm using 30 minutes. Look at it on the 1 hour. It will look like a straight candle. So this was the candle, and this one followed. So this is not a mitigation. You don't say it this way and say, oh, this is a mitigation. This is price violating the uh okay, that wouldn't have been an order block, but this is price impulsively going out of here with multiple candles. So this is not the pullback has to happen. You see, I did not draw it like this. I did not do this. How can I make this okay? I did not do this. I didn't do this. Even though this is close to what you're talking about, this is even more clearer to what you are talking about. So that is not mitigation. Once price take out that particular zone or high, let me just say high or low. Whenever price take it, the same way price takes it. Let me reverse this. So you just watch when price take it out. So price taking it out now, we wait for that pullback. It has to be like a pullback, not just one candlestick this thing. No, it has to be a pullback. So it is the pullback that you call mitigation. Now, unless you want to go to like 5 minutes, then this might look like a little pullback, and I'm not even sure if it will look like that on this, but you can see even on the 5 minutes, it's not looking like a pullback. It was still candlestick moving up. So that was not a mitigation. The real mitigation comes from the pullback. So this was the pullback after taking it out impulsively. So we got the pullback back to that mitigation block. So that's
Okay.
our pullback. Yeah. So the other continuation just came from fair value gaps, I think. Yes, 15-minute fair value gap and stuff to the uh, last eye. So the other rule here is it has to take it out impulsively. In fact, we need that impulsive move. We need that impulsive move to actually say this is a mitigation block or breaker block. You want to ask a question? Please, if you're not asking a question, just mute your mic, please. So if we have it like this, we have this breaker structure. If you have it like this, breaker structure, we need that impulsive move. We need to take it out like this. So we don't need little candles or uh weak candles that will look like we've actually not taken it out. We don't need just like a little break like with a week or so. You need to take it out impulsively. So I'm taking it out impulsively. We will not expect that pullback. If you don't take it out impulsively, you might not even get a good pullback. You might still get a very weak pullback that price will just not take properly. So on returning on that pullback is where you now pick your entry to the next corresponding high. This is a bullish scenario for a breaker block. So let me mark out other examples. And as I said yesterday, they best work when we are correlating with a fair value gap. They work alone also, don't get me wrong. They work alone also very well. But they best work when they are actually overlapping with a fair value gap. and I think I just found a good example, even though this is a okay, this is still a mitigation block. Did I mark this out as an example yesterday? I can't remember. I'm not sure if it was this class or it was a private student. I can't remember. But this is another good example here. So even though we add this one as a liquidity, we wait liquidity. We had a consolidation which we used as liquidity before the mitigation. So you can see there was a liquidity void. This is a liquidity void. As I've always said, liquidity void is just a big fair value gap, a wide fair value gap, a long fair value gap, whatever English you want to use for it. So this was the candle here. This was the candle we used overlapping with this. So for us to just get the perfect entry, or let me just say a clean entry, is why we use this. On a normal day, this was a very big one. So the middle also was somewhere around here. Middle as in 50% of the fair value gap. So I'll still call it fair value gap because it's just a big fair value gap. So if you call it a fair value gap, you are still not wrong. So as you can see, prices are around the surface of the mitigation block is just around the 50%. This is like one of the examples I marked out yesterday. So you can see we took it out impulsively once again. That impulsive distance has to be there. So I'm taking it out impulsively. We had a few consolidation which we used as liquidity. This is normal relative equal, but just for a clearer chart is why I just mark it this way. You understand? So wait for mitigation. So as I've always said, the next eye is good for your take profit level, or use the higher time frame. So uh, this was it. So that was the mitigation and entry. Actually, yeah, it was another
Sorry,
favor.
can
It
I?
was oh
Sorry, please. Let me offend you. Can I ask a question?
yeah.
That that setup you just do just now. Yeah, this one. I want to ask: is not the inducement? Is it not far from the POI? Because most times before, like we always say that the inducement should be closer to the POI. So I'm just saying that. Does it really matter?
Actually, this is not really far. This is not really far. Yes, I've once said it should be closer to the POI, but this is actually not really far. On a normal day, inducement is an extra confluence for this type of entry. You see, we didn't go far away from that zone. You can see we didn't really go far away. As of here, we didn't go far away. So any pullback from here is okay to take the entry from. We didn't go that far away from this particular zone. So the liquidity there was just an extra confluence for more to look to make us realize that it is more valid. So it is not actually far away. So did you get that? Did you get that? Can you guys still hear me, or is it from him?
We can hear you.
I
We
have
can
a,
hear you.
I have a
I can
question.
hear you. I can hear you. Thank you. Thank you.
All right. So
Please have a question.
so
Please, I have a
that's
question.
all right. Go on.
Yes, this POI you drew, the first one that had that impulsive move. What POI is that?
Which one? This? Are you talking
No,
about
not
this
the
one?
first, the second one.
This one that I just draw?
Yes, yes.
Wait, hold on. Are you talking about this? Are you
Two
there?
rectangle space there.
Talk to me.
Yes, yes, I'm here.
Huh?
Yes, I'm here. That little rectangle space. Yes, yes, that POI that you drew,
This one.
the one up a bit.
Look at the circle.
That you had
Look at
the
the
entry.
circle.
Yes, yes, I can see
Look
the
at the
circle, not
circle.
this circle. Yes, I can see the circle, not the
This
circle.
one.
Yes, yes, exactly. Yes, that one.
Alright. This one. Okay. That's a good question. I actually expect that question. So this one to be this. This is just let me say extra refinement. So on the normal day, on the 1 hour, I had a fair value gap, right? On the 1 hour, there was a fair value gap. The last I price took it out impulsively, but didn't actually take it out to a good satisfaction that will give us a good pullback, as you can see. So we had a fair value gap on the 1 hour. You can see we had a fair value gap on the 1 hour. I think we had on the 30 minute also. So this was just with experience of me looking for a perfect entry. So on the 30 minutes also, you can see on the 30 minutes the mitigation block was still not overlapping with the fair value gap. It was not overlapping with the 50% of the fair value. You can see it's a wide one on this. So this is where the middle, the 50% was kind of lying, right? This was where the 50% was kind of lying. Then I had to go
Yes.
down to 15 minutes to look for a smaller fair value gap once again. So on getting to 15 minutes, this is just refinement. All these process I'm taking is just trying to refine to get a good entry. So as of the time I'll get here, I realized that the surface of the 15-minute fair value gap is around the same zone of the 50% of the 30 minutes fair value gap. Now let me come again. 30-minute fair value gap, remember the 50%. Let me just use one line. So for the 50 for the 50% for the 50%, okay, let me just say surface of the fair value gap on the 15 minutes. This was the zone. This line was the zone. Let me label it with 15-minute fair value gap surface. Let me just use S. So let's go back to 30 minutes. So as I was saying, it was just refinement. By normal they would have just picked 50% of the fair value gap of the 30 minutes and just go on. But look at how big the stop loss would have been. Even if I use the other block, this is where the stop loss would have been. So it was just refinement. It was just refinement. So on the 30 minutes, this is what it looks like. So can you see The 50% is around the same area. You can see this is the 15-minute surface. This is the 30-minute. This is 30-minute. The second line is a 30-minute fair value gap, 50%. So everything was kind of aligning here, right? Everything was kind of aligning, showing that okay, that zone would be a good entry, a good refinement. Because so far we had the 30 minutes 50% correlated. You know, the main reason I even went for 15 minutes was because this 30 minutes was big, was large, and the stop loss would have been ridiculous for a good risk to reward. So I had to go all the way down to 15 minutes, right? So on 15 minutes, this zone was looking like a little break. So just to have something that will mark from here, so I used this area. So still looking like a mitigation block actually on the lower time frames, like 5 minutes, 10 minutes. It was okay. I think on the 10 minutes it was clearer. I can remember. Well, that was not the point of the entry. Like that was not the main point of interest for the entry. The main point of interest was still the fair value gaps that were lying around there. Don't forget there was fair value gap on the 1 hour, there was fair value gap on the 30 minutes, fair value gap on the 15 minutes. So I go all the way down for a better risk to reward. So everything that happened there was just refinement. On a normal day I would have marked it like this. I would have just marked it like this for continuation entry. Just mark it like this. So I'll just mark it like this. Entry will be here. Uh, Stop loss will be here. And if I want to use 50%, entry will be here. Stop loss will be here. But you see how ridiculous it is. Even if I want to use, um, even if I want to use 50% for refinement, don't forget the refinement with the third candle. So it would have still been here. It would have been here. Alright. So the RR is still not favorable. The RR is still around 3R plus. It's still around 3R plus. So far, why this was picked is just for refinement, for a better risk to reward. So, and that is where we are now.
Okay.
Yeah, hold on. So, just for instead of just like maybe trying to mark one line, because if I later mark 50% of the 15 minutes again, it might still not be around here. So on the 10 minutes, it was looking like we had a little break here that is looking like a mitigation block. Oh, sorry. So it was just marked. After this, I'll refresh my trading view. I'm not sure if it's the network or because it's plugged. I don't know. It's kind of lagging. So that was just extra refinement. All this is just going into details just for a better risk to reward. On a normal day, not to stress things out, I would have just picked the 50 minutes 50% and then just go on with the entry without any stress. So this was just extra refinement, going all the way just to look for a good entry. There is no perfect entry. I was not even supposed to be using perfect since there is no perfect entry, but just for a better risk to reward, just for a better entry was the that was the reason for all this confluence going down to the time frame, marking the 50% and all. So that was how it come about this entry. So on a normal day, this entry, the one you asked, is still lying around 50% of the 50% of 30-minute fair value gap. So to not get you confused, you can just go the normal way of using 50% of the fair value gap and 50% of the last candle of the other block. Actually, this was even the last candle for this 30 minutes. So it would have been sorry, it would have still been ridiculous. The stop loss would have still been way bigger. So that's why I did all that confirmation. And don't forget, doing stuff like this, doing all this refinement, you are opened to actually more risk. You can actually be stopped out. Of course, you have a good entry. Most times it will even be a sniper entry. But you can see going all the way here for this kind of entry was to look for a better risk to reward. So you can see it was a sniper entry. This was a sniper entry also. So most times you can get a sniper entry with all this refinement. But if it goes wrong, you are risking probably getting taken out even before it will invalidate. Even if price gets here, if price does this is not invalidated yet. This is not invalidated yet until we do this. Then that particular POI is invalidated. So price can do this and still play out, but then your stop loss has been taken out already. So all this refinement comes with that type of risk. You understand? So
Yes. Yes, thank you.
Alright, let me refresh my trading here. Alright, it's clear I have network issues because it just keeps lagging and back and forth with this. So don't forget this particular rule of correlating with current market price. It has to correlate with current market price. Hold on. So if the correlation is not there, if it's not corresponding with current market price, then you are doing the wrong thing. No matter how right the fair value gap is, no matter how right the mitigation block is, no matter how much it is overlapping, if that particular point of interest is not correlating with current market price, you are doing rubbish. So that's why sometimes you'll see a POI. Sorry, you see a POI, perfect fair value gap, perfect mitigation block or breaker block. Everything is looking just perfect, and then you just see price just violate it. So at the end of the day, checking out and stuff, you see, okay, maybe you'll see, oh, I was used as liquidity, or oh, we are actually not bullish, something like that. It might be, what is choking here? Sorry. So it might be a bullish fair value gap, but on checking after it gets validated, you realize that, oh, we are currently not bullish, we are bearish. So of course, all this also can be perfect correlation, liquidity taking, uh candles of the fair value gaps complete, good impulsive move for the mitigation block, overlapping with fair value gap, blah blah blah, and it can still go wrong. Nothing is 100%. Nothing is 100% on the charts. Technically, you can be right on all that and it will still go wrong and go for maybe another POI, like maybe another block below or this thing. So if you want to ask like, okay, which one will you now go first, knowing that it can still go for another block or so, every fair value gap you take should cover up your other block. Because sorry, every fair value gap you take should cover up the other block. What I mean by that is, I don't think I should even lay more emphasis on that, but just to be clear, if the fair value gap is here, so your stop loss, is here. That's the invalidation is here. So other block will be somewhere around here. So it will be covering up the other block. That's the normal invalidation. Even though you can now refine and price might not be around there, but that's the normal invalidation. So that's why we use fair value gap, knowing that even if price gets to the other block, it will still play out. So we know that, okay, the fair value, the other block also is feasible to be mitigated. When I say feasible, is like we know that it is available to be mitigated also. So we use the FVG, knowing that even if price takes out around that 50% zone, it can still mitigate the other block and still play out. So sometimes also that is not 100%, price can still do this, because even other blocks to get violated. So nothing is 100%, and that's why we use stop loss. So yeah, so far so good. I've marked examples on mitigation block and breaker block. I'm trying to remember something. Alright, so on the top down analysis, I had this private session today, so I'll just drop it. And tomorrow we'll now have a session on it to continue whatever knowledge we've gained from that. So hold on. Okay, after this session I'll just look for it. Okay, I think I know where I will say it now.
Chief, I have a question.
Alright. Go on.
Okay. When you explained, when you drew the mitigation blocks, it was very understandable. But when you showed the mitigation blocks at the last question I asked, you said there was like a mitigation block at the at the left, and you said it wasn't overlapping the FVG. Do you remember what I'm talking about?
Just finish your question. I can't
Yes,
get you,
yes.
so maybe when you are done with the question.
Okay. So my question is like I would like you to actually go to that particular place and like to show what made it a mitigation block.
Are you talking about this? Oh, the last one, right? Are you talking about the last one or the ones I've been marking so far?
The one that you just explained now, where you had to refine the FVG, towards the 15 minutes and every single thing. You said there was like was a mitigation block, but it wasn't overlapping the FVG, so you had to refine something that actually you'd actually show me like what made it a mitigation block.
Alright. Where is it? Okay. So if you add when I said it is a mitigation block, you will hear when I still said we didn't take it out impulsively. Like the impulsive move wasn't really clear, especially we know that on the normal day our continuation entries will come from the um 30 minutes. So this was the mitigation block. As simple as it may get, this was the mitigation block. Actually, it broke internally. It broke internally, so uh, this can still be called a breaker block. But the internal distance doesn't really count because this was more like a consolidation before that break. So if it happened like this, let's say this was a clear inducement. This was not the normal break or structure inducement. This was not the last pullback before the this thing inducement. This was relative equal low liquidity. But earning liquidity before your point of interest is an inducement. That's why I call it an inducement. This was not the normal break or structure inducement. If it was like this, that would have been what? A break or structure inducement. That would be the normal the definition of last pullback before the point of interest. That's the last break or structure before the point of interest. So this was not that. That is not the case here. The case here was a relative equal low liquidity, right? But I just called it an inducement because any liquidity before your point of interest actually is an inducement. So let's put that in mind that we didn't actually break that structure. So not breaking that structure, we can't call this low a break of structure. It was an internal break of structure that came from consolidation, that came from this consolidation here. So we can still call this a mitigation block. So this was the mitigation block. You can see as I explained, is the consolidation that is making it look a little bit confusing. But as I explained, you can see this. Let me sketch it out. So we had this. So look at the movement. We had this. We had this. And we had this. Right? Now let me bring it out. Let me bring it out of the chart. This is what I just sketched out. Right? So bringing it out of the chart, this is it. So, but don't forget. Okay, let's just call it a breaker block, even though it was an internal break. But let's just call it a breaker block. Even though they do the same job actually, as I said yesterday, it's still the same job, the same continuation. So this that got take out here, got take out. You can see the impulsive move that got take out, even though the impulsive move wasn't is not up to this high. It was somewhere around there, as you can see. So this becomes a mitigation block. So the rest here was just fair value gap refinement. The fair value gap refinement below was where I later picked the what's it called, entry from. So as I said, I can still use that 1 hour. You can see next. You can see. So at the end of the day, before this thing, you will have to wait for that fair value gap candle to close. So at the end of the day, this was what the fair value gap looks like. So instead of using that as the end, you can see this is exactly what I said from the other explanation, that it has to take it out in a way that the pullback won't be a candlestick like this. You can see the pullback is looking like just one candlestick. So the pullback won't look like a candlestick here. So that's why the second option was the fair value gap. So that's why the second option was the fair value gap. So on a normal day, sketching it out, this is what it looks like. So the rest that happened there was just refinement. So do you get it clearer now? Why is that
Yes, exactly. Thank you. I got it clearer now. Which brings me to one more question. The mitigation block or mitigation blocks, must they always sweep? Like I could see that in this mitigation block now, it swept it. What if it doesn't sweep it, but at the same time it doesn't take the high, but it gets very close to it, whereby it invalidates any zone that makes it look like maybe an inducement to that place. What if it just get?
Are you saying it doesn't take this high?
No. I'm saying like these two mitigation, the mitigation block there. What if it does not? What if it doesn't sweep that level? What if it just buys up, but maybe just mitigates an order block or something, but does not sweep, that high? Is this still going to be like taken as like a mitigation block?
You have to come again. Let me use a circle to identify what you're talking about. So are you talking about taking out this if it doesn't sweep this high?
What I'm talking about is this second push up that made it like this second push up that doesn't, cause a break of structure.
This one?
Yes. That second pushing up that doesn't cause a break of structure. In a situation whereby,
this one.
Yes, it look like that caused this exactly. Yes.
So you say it
Yes,
doesn't sweep this high?
Yes, if it doesn't sweep that high, but it bites very close to it, whereby it would like there's nothing that is there that would be valid for anything to be used. Does that also validate as a mitigation block, or it must sweep this high, the previous high?
It doesn't necessarily have to sweep. It doesn't necessarily have to sweep this high. Wait, hold on. Let me answer it though. I'll come back to your question. So, you are talking about taking this high, like price is not taking this high, right?
Yes.
So you are saying, does it have to take this high before you can call it a mitigation block?
Yes, does it have to sweep it? Yes, without breaking it.
All right. If it broke it, this is what it will look like. If it breaks this high, this is what it will look like. So if it looks like this and price still takes this out impulsively, of course it is still a mitigation block. Okay, that would have been a breaker block actually. That would have been a breaker block, because now it won't look like an internal high because this was taken out. But of course, this would have still be a valid entry for continuation, especially if it takes it out this way. But if it's like this, if it looks like this, if you don't, let's not use this eye now. Let's use this candle as the eye that got taken out. This is not valid for entry unless it actually takes it out like this. So of course, if this eye was taken, it is still valid for either breaker block or mitigation block, but we would have called it a breaker block. That was what I was trying to mention the other time, that we didn't take this eye, so it's not an inducement.
Okay.
Yeah.
Yes. So my question now is, what this the buy that swept out the high? What if it doesn't, like, let's say it doesn't cause a break of structure, but at the same time it doesn't sweep, like it doesn't, like, it buys so close, like, let's say, since that high is like, let's say 100%, let's say it buys close to like 90%, but it doesn't sweep that high, and then it then has an impulsive move. Would it still be taken as a mitigation block?
Wait, hold on. You are saying if this doesn't take this high,
Yes, like, let's say,
right?
like this place, yes, it swept. Where you are right now, it swept the previous, that other previous. Yes, it swept that exactly.
So the
Yes,
previous high.
yes. Now, what I'm actually saying is, if in a scenario whereby, let's say it swept that high, that what it just swept was like 100%. Let's say it's bought up to like, let's say 90% of that particular high, and it doesn't like sweep the wicks. Let's say it just mitigated the body and then had this same impulsive move. Would this be taken as a mitigation block?
Okay, so you're saying if it does this, right? If it actually didn't break this low here, wait, hold on. If price didn't take out this weeks here, that's what you're saying, right?
No, what I'm saying is, a price can, like, if price could take out the wicks, I'm talking about the
You
wicks
know
at the
what?
left.
You know what? Share your screen. Can you hear me? Share your
Yes, I
screen.
can hear you.
Share your screen and mark it out. I'm kind of getting confused with the question.
Okay. Okay.
I'm not seeing your screen yet, and we are waiting.
Okay, can you see my screen now?
No, am I the only one? Okay, I can see it now.
You can see my screen, right?
Yeah.
Yes. So what I was saying was, in a situation whereby price did this and, it gave this low, it doesn't sweep that low, with the week like this. Let's say it does this scenario, and then, takes that out where it did it and then had this impulsive move. So now my question is, would this also be considered as a mitigation block, despite the fact that it didn't sweep this week up here, but still, mitigated this place to a point where, like, this is not like an inducement to this other block or, anything. It's just like, it's just mitigated it. So that's what I'm asking.
Well, I'm actually surprised. You're asking this, but anyways, let me show you. You can stop sharing your screen now. So, wait,
Sorry,
hold on.
I just want to make some like on the charter example. Like what he's saying, if you check GU now, like he's making the same structure. It's forming the same
Please,
structure. If you can check GU.
yeah. Please hold on. Yeah, I'll still check you, but uh, I just want to make something clear. Yeah, let me check again. This is, wait, hold on. Am I tripping, or this is same thing that uh Henry? This is same thing you just this year. This thing you sketched that. Wait, hold on. You can let me
It's the same.
wait, hold on. This was it. You marked something like this. Didn't sweep out the eye. Came like this. Then an impulsive move. I still check G for this one for the person that talked about G. This was this, right? This is the same thing you marked. Don't you
Is
see
what I'm
that?
basically saying.
Huh?
Yes, I'm seeing it. This is why I asked the question. I asked the question based on the fact that I'm seeing that it swept that high. So I'm saying in a situation whereby it does not, like this mitigation block, it does not have to sweep the high. That's what I'm basically asking about. It doesn't have to sweep the high. Even if it just gives an impulsive move, it's still a mitigation block. As long as the
It doesn't
first
it doesn't have to sweep. It doesn't have to sweep this eye. In as much as you have
with a
this
week.
impulsive move, and there is no, not a week. It has to be a candle. It has to be a full body candle or candles. This is the same thing that is here. So it doesn't have to do this. If it does this, it is this zone here is still a mitigation block. If it's like this zone here is still a mitigation block. In as much as this impulsive move was taken here.
Then that answers my question. That's exactly that answers my question. Yes, that answers my question because what I was because when I saw the fact that I've been seeing your mitigation blocks and I've been seeing that they've all like at least a certain point, they've not taken out that high, but they've swept it with the week. So I've not like seen a situation whereby the impulsive move took it out, even though it did not get to that sweeping level. That's why I was asking the question.
All right. I think until you shared your screen, I think I was getting it from probably the few questions I even answered was not what you're talking about. But since you say you get it right now, thank God. So, so the person talking about, is this what the person is talking about? This is not a mitigation block. This is not a mitigation. There's nothing here that looks like a mitigation block.
Like, sorry, I mean down a little bit. Come down.
Yeah.
Yeah, yeah. That there's a high here and there's a low here. That high, yeah. And there's another high here before we break of that structure.
Ah, I wish I screenshotted that one. This is a okay. So one thing you will notice here is these two were taken out. That's one thing you should have in mind, and that's what makes it a mitigation block. These two were taken out. Both eyes here were taken out. Why for GU? Only this. Where is it again? Only this was taken out. This particular one was not taken out. We didn't have this. So this is more like an internal structure. We didn't even really break this structure where everything that happened here, we didn't break. This was more like consolidation, then this low. So if we had taken out this I impulsively here, then we would have used this as our mitigation block. But this was not even a proper break. This was just more consolidation. Then we had this low. So So in normal day, I would have even used fair value gap here because it's kind of below. It's kind of below the mitigation block. I actually don't even pairs like this. So as of here, the job might be done unless we add an higher time frame or this thing from here. So you can see price actually use the fair value gap instead. Price mitigated the fair value gap instead. Yeah. So it actually has to do this. It's different scenarios. Now this scenario is not same thing on that gold. We didn't take out this eye. So of course this is not a valid one. I said it that we need that impulsive. It has to take it out impulsively. We need that impulsive move clearly. Then with the pullback, you can see if you even mark it out from here now. If you even mark it out from here. Now let's stop around here. Let's now stop around here. Where do you want to expect the pullback? You can't even have a good pullback that will now come back for this. If you want to call this a mitigation block now, there is no good pullback because it didn't take it out impulsively. The movement didn't do something like this that you now expect a pullback like this. So it's not obviously not complete when it comes to the confluence for that mitigation block. It's not complete. So now we can use the fair value gap because it's below this. It's below whatever POI you would have taken that you would have called a mitigation block here. So that was actually the scenario with GU. And regarding this one that is happening here, there is nothing like mitigation block here. This was not a full body candle. This was not a full body candle that would have done this. This was just straight wick. This is even out of the picture. Well, I'm glad you said this is not what you're talking about. So that is just out of the picture.
Okay.
So
Yes, now that yes, Chief. So now that you answered that particular question, now this is when you answer the particular question as to the fact that the impulsive move has to take out those two highs and every single thing, and it doesn't matter whether it sweeps or however if it sweeps or if maybe it gets, as long as it doesn't break structure, it doesn't invalidate the mitigation block. Now, my question now is, in a scenario whereby, like, if you look at the mitigation block that you showed before, the two highs were like equal, like kind of like it was pretty much like a relative high. The only difference is it needs to be top. Now, my question now is, in a situation whereby it's not like it's the mitigation block, like it doesn't get to the point whereby it sweeps, let's say it's less, just like you showed the other example whereby let's say it's less than the other high, but there's an impulsive move that takes it out. Where would you draw your mitigation block from? Would you draw it the way you draw your breaker block, or the way you draw any other thing whereby you're going to draw the first one you see, or you're going to draw the second one, which is going to be the mitigation block?
Alright, I would like you to mark that because I won't lie, I'm kind of confused on that also. So let's see your screen once again.
Okay. Okay. So, can you see my screen?
Yes.
Okay. So, in a scenario whereby, just like you drew, let's say this is it, and let's say it's swept here, and let's say price does this impulsive buy. This is where the mitigation block is at, which there will be like confirmation and everything. Now, in a different scenario whereby price does this, but it's like this is like shorter, and then it takes that impulsive buy. Now, is the mitigation block going to be here, or is it going to be here? This high or this high? Which is it going to be at? That's what my question is.
All right. Um,
Did you answer the question I
you guys can
asked?
see my screen, right? You can stop sharing. Yeah, yeah, yeah. You guys can see my screen, right?
Yes.
Yes.
All right. Of course, this is just. Wait, hold on. Uh, trying to. I'm trying to mark it from here. But it's looking like. Okay, let me just go to my chart. Can you guys still see my screen?
Yes.
So this, 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 something like this, right? Can you still hear me?
Yes.
Can hear you.
Did I mark this right?
Yes. Yes, you marked it right.
So of course, in this scenario, when you have it like this, with this kind of impulsive move that started all the way here, first off, this is an internal break. This is an internal break. This is something like if you're on the higher time frame, like if it's not like 30 minutes or 15 minutes, it would have still, oh sorry, it would have still looked like this. It would have still looked like this on that higher time frame. It would have straight up just looked like this. But let's say if you go to 30 minutes or 15 minutes, that's when you see it breaking again internal structure like that. But let's not get things confused now. So on a normal day, if it's impulsive this way, you will definitely have a fair value gap somewhere around here. You have a fair value gap somewhere around here. So if the fair value gap is overlapping this, of course this is the first option. Actually, this is the first option for the mitigation block. This is the mitigation block. So the fair value gap will be overlapping here. So you can use 50% of this. That will be overlapping with 50% of fair value gap also. Sometimes it might not overlap with 50%. It might overlap with probably the surface, or the 50% of the mitigation might overlap with 50% also, or 50% may overlap with surface or the fair value gap. All in all, what I'm just saying is fair value gap should be overlapping with this. So this will be used as
Okay.
entry, either the 50% of fair value gap or this. So unless you are refining, knowing that okay, your stop loss might be somewhere around here if you're using the fair value gap, or somewhere around here, is when you can now go extra. That's refinement though. You can now go extra and pick, probably let's say you went all the way down to 15 minutes or 10 minutes, you can now, this will now look like a proper mitigation block, like an higher time frame mitigation block. Then you can use an entry here, but you are risking, let's say, a missed entry. You are risking a missed entry, because on a normal day this would have been the entry. So if anything makes you refine all the way here, you are risking a missed entry, because this is this is the one you are supposed to use. So did I answer your question?
Yes, 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 you did. So in that essence, when you drew that other mitigation block when they were too high, you just drew the one that was closest to the FVG.
Yes.
Yes, okay, that was it. Because it looks like you took the second one. So that was why I asked if the second one itself is the mitigated block. But when you explained this, like it has
That's
to
why I
overlap with the
said
FVG.
that's why I said on the second one that all these are just refinement. I said it when I was mentioning. I said all these are just extra refinement. So that was it. All right. Any other questions? Any other questions?
Yes. Hello. Can you hear me?
Yeah, I can hear you. Go on.
So, my question is just looking at what market is doing, because I saw you were mapping out like the current where the price is currently. You're mapping out the 50%, but looking at it, like zooming out to look at it, once you say that where you wrote TP high, once you say that price broke that point, um, created a little bit of inducement and is currently respecting the 50% for a buy instead of a sell.
Wait. I'm so sorry. Can you come again? You're talking about price taking out this high, right?
Yes, where you wrote TP
Uh
high. Yes,
yes, and taking out which 50%?
like price takes out the TP high. That's more like a breakout structure. Then would you call that the little candles and inducement that price is currently coming back um to the 50% for a buy instead of a sell?
Oh my God. Sorry. Now, this is what you're. Let me try and get you. I'm kind of confused. When you everything was going on well, so you said buy instead of a sell. Because so far we are still bullish. So what do you mean by buy instead of a sell? I was getting your question right until that moment.
Okay,
So
because why I was asking a buy instead of a sell, because I saw you mapped out. Maybe I joined in late, sure, but I saw you mapped out the fair value gap. That's the current one, the fair value gap there.
okay, you see me
So I
marked
was,
a bearish fair value gap.
yes.
So you're
So I
saying
was
why is
thinking,
it
will
a
you?
sell instead of a buy?
Yes, instead of a buy
Oh,
overall.
this is what happened. This is what happened. All right. Overall, this is what happened. On a normal day, most people expected this fair value gap to play out because they feel it was overlapping with this also, but this wasn't an impulsive move. We had these consolidations around there. The impulsive move didn't, we didn't get a good impulsive move that would have taken this out, that would have probably fair value gaps around here, or even if it's not fair value gap, good candlestick all the way up here. It was more of consolidation mitigating that same zone. So on the lower time frame, this came like it has mitigated this particular week here. So expecting this would have been more risky. So this was more of what happened. Price came for this one. Price came from this one. Some one thing with me is I ate let me just say all time highs. Because after all time highs, anything can happen. You can sell from anywhere, and you can, most of the buys will not be as active. You can't say this is a higher time frame high now, because this is just an all-time high that just formed. So I don't take entries like this. That's one thing about me. I'll actually wait for the sell to start. So it's when the sell start I can start taking entries. So this was what happened here. Price came for this. Price came for this. So we would have used this I also as TP. On the lower time frame, I think 30 minutes or so. 30 minutes or so, you'll see that during the news, it was a good mitigation and TP before this one at all, before the second candle at all. It mitigated and it hit TP. It was very, very fast. So this was literally what happened. This was used as liquidity. It was an internal break. So if it's an internal break here, you can consider it as a inducement. Wait, hold on. So it was an internal break and used as inducement for that 2-hour fair value gap. So that was what happened. We mitigated it under like 5 minutes or so. It's mitigated and it TP. So after that happened, we swept that last eye. This eye here. We swept this eye. So one thing with me is I don't continue buys from higher time frame, I say higher time frame, all time highs, because then some people will say they are using psychological TPs or TP. Like it's hard to actually look for a particular TP when it's all time high, because anything can still happen. So we had this sweep, even though it was a week, so it is not as valid yet. So this is looking like on the 1 hour time frame. Actually, it was internal, but it's looking like a change of character already. Then we had an extra break of structure also. So after the extra break of structure, I marked out a 2 hour this thing. So even if I want to consider this for the 1 hour as my change of character, I am still not selling. I can mark POI out just for me to wait for price to just see what will happen. So me marking out this POI doesn't mean I'm saying I'm bearish now. No. Marking this POI now doesn't mean I'm bearish. Sometimes I just enter the pairs, check out what is happening. This was even marked out before. I just deleted it. If I can remember screenshotting it for journaling later. I screenshotted personally for journaling later. So this was just yeah before I started this session I deleted it. I'm talking about this bullish this thing here. So me marking it out doesn't mean I'm bearish now, but I'm waiting for price to react from there. If we get here, if we get here now, and we are, let's say, a 2 hour or 1 hour bearish engulfing with a 30 minutes break of structure. If you have a 30-minute break of structure here and it gives us a fair value gap here, I will actually enter. I will just risk it just to watch how it will play out, because the sell might actually start from there. That's one thing with all time highs. The sell can start from anywhere. So it is not 100% knowing that your last high is actually an all-time high. So I actually thought the sweep has happened, because most people thought the sweep has happened here, because that's one thing with all-time high. Once you have the sweep, so this TPI was looking like the sweep, but you can't call this a sweep until you take out this low. It's when we take out this low now, then you can, this would have been a proper sweep. So even that one that I marked out taken out with a week is not a proper sweep. So if we are taking this out now, then we are very sure that we just change character on the higher time frame, lower time frame, whatsoever, and we can start looking for selling opportunities on confirmation. Don't forget, change of character is just a signal that you're about to change current trend. It's not saying you've changed current trend already. So currently we are here, and for most people that thought the sweep happened already, that came to mark, I saw people marking other blocks from here, marking fair value gap from here. There was a fair value gap, there was another block, they got taken out. So I feel like after all these eyes has been taken out, this current eye got taken out with this long week, I feel like we might start the sell there, but everything that will be happening here will be on confirmation. So until this happens, before I start selling. So me marking this out doesn't mean I'm saying I'm now bearish. No. For whatever buy you even want to buy here, which other POI do you want to use? Is there any other POI here, unless you want to come all the way here? Because personally, I'm not seeing any buy point of interest anymore. Forget trying to buy from here again, because the job has actually been done. You are just seeing the wick this way. because it's on the 2 hour. But in normal day, that FOMC news, price has mitigated and it has taken this high already. So don't, if you are coming to do this again, personally, I feel like that would be very risky. Like if you are still waiting, if you are still on this, if you are still on this, now waiting for this high to be taken out, no, this particular mitigation has taken out the next high. Let me show you once again. Can you see? I had to go to the lower time frame to show you clearly. Even though it didn't get to the 50%, but it actually mitigated that fair value gap. It mitigated that fair value gap. As you can see, it's looking like this because it's on the 2 hour. But on the if you even check some of your broker, it actually got to the 50%. So you can see we mitigated and we've taken the next high. So the job of that 2 hour fair value gap is done. So if you are looking at it this way and still expecting it to play out, personally I feel like it's more risky. It's actually risky because on a normal day would have assumed that the job is done. But anyways, I know some people are still on this buy, so let's see how this will play. So me marking that doesn't mean I'm saying I'm bearish now. Of course, this is looking like on the 1 hour time frame, it's looking like mitigation block, even though the mitigation block is not overlapping with the fair value gap, but I'm using the 2 hour fair value gap. So you can see this my alert. The alert is around 3670. I just set my alert there to watch price. You can see I did not mark any entry, so you won't there is no entry here to say okay, I'm not bearish and I'm selling already. I'm just waiting for price to react from there and we'll see how it goes. So did I answer your question?
Yes, yes. Thank you.
I'm also from, there is no POI here. When it comes to bullish POI, I am not seeing any POI here unless anyone wants to use this other block. Unless you want to use this other block or this other block, which personally I feel like is risky, like way risky. So unless you now want to come and use this 2 hour fair value gap, but by the time you are coming for this 2 hour fair value gap, we would have changed character. That's one of the things that we should be observant of, like you should observe. By the time price is coming all the way here, we've changed character. So which might make this more risky unless it's on confirmation. So by the time you are coming here, this would have changed character. We would just be waiting. This might just be a potential buy for the next sell. So far, this is where we are. I didn't even really catch much trades on gold. It has been more of trying to look for the buy on BTC, back-to-back stop loss with wrong entries, even though the pair is now still currently buying. But my point is, this is where I am, where we are now on gold, and that is just what I'm expecting. So you said I answered your question, right?
Yes, yes. Thank you.
Alright, I think we started then, okay, it's just around 1 hour 30 plus or 1 hour 40 plus so far. So any other question? I'm trying to round up now. Any other question?
I have a question.
Okay.
Yes. It's something that had to do with structures and change of characters. So let's say in a situation whereby there's an external high and there's an external low, and price like it's buying, giving little internal structures. It's on the 1 hour time frame, giving little internal structures, and then it forms a higher low before it takes out the external high. Can the the law is formed, that internal structure law, is it a valid change of character, or you're going to have to wait for the other external law that should be taken out for out of
You
law?
have to wait for the external law. Since you said the new I is an internal I, you're saying the new uh higher I that is formed is an internal I. So of course you have to wait for that external one to be taken out before you have a proper change of character.
Okay. Okay. Thank you. Now, please, I want to ask a question about the mitigation block that you showed us. I want you to go towards that, please. So I'll ask it.
All right.
Okay. Yes. So with this mitigation blocks, let's say it was overlapping with, let's say the impulsive move was, enough to overlap with the FVG overlapped with the mitigation blocks. Now, my question is, would you draw it from the second, any high? If you draw it from any of the high, does it make it less accurate? Like, should it be the second high or should it be the first high? When I mean the first, this, do you understand what I'm talking about?
Are you talking about both of them overlapping the fair value gap?
Yes, both of them overlapping the fair value gap.
But if both of them is overlapping the fair value gap, one will be more accurate when it comes to maybe overlapping around the 50% or the surface. So one would definitely, unless it's equal eyes, and this is not really looking like equal eyes, it's looking like relative equal eyes. So unless it's equal eyes, then you can just mark it straight from both of them. But of course, one will be more accurate than the other. So currently, they are looking very close. So if this is more accurate with mitigating probably the 50% for a better risk to reward, then you go for this.
Okay,
But
thank you.
normally, if this was a very good eye that gave this like a good distance, that was a good height between both of them, and then this first one happens to be overlapping with that 50% of the fair value gap, then you go for this.
Okay. Okay, thank you. And also, when you talked about the impulsive move, you mean like an FVG or like steady, healthy candles, or is it both?
Steady LD candle. It doesn't necessarily have to be fair value gaps. It can be fair value gaps, but it doesn't necessarily have to be fair value gaps. The first one I even draw, where was I? I can't remember. Where you place someone asked if it was mitigated. If you remember that particular scenario, when someone asked
Mm-hmm.
if it was, yeah, you can see it was not fair value gaps, but it was steady impulsive candles. So it
Okay.
doesn't necessarily
Okay.
have to be fair value gaps.
Okay. Okay. Thank you so much. Thank you.
You're
Thank you.
welcome. So actually I'm a little bit cold and I've been choking on something. I don't really know where the thing is coming from. So I'm actually sleepy. I think I've answered a lot of questions. Most of this session is even based on, I think half of the hours, or let me say minutes here, has been on questions. So hopefully we've learned one or two today. So I'll be rounding up now. By tomorrow morning, I'll drop the recorded session, or probably tonight if I don't sleep off before it's load. So I'll be rounding up now. Tomorrow, okay, I think I've sent the top down analysis. It was just 35 minutes, but I'll still go further into it. But that is just for us to have a little knowledge on what I'm going to talk about tomorrow. So I'll be rounding up now. So thank you for coming. Have a nice day ahead and have a nice night ahead. Good night.